Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Good morning, everybody. Cowboy here, and we are live, and it's Thursday, the day after FOMC, and as you can see, the Bitcoin does not care that this was a supposedly hawkish FOMC, and that's what everybody's saying. It's hawkish. Guess what? If you think this is hawkish, you might have a little bit of a problem with math. What do I mean by that? Here's the thing about FOMC. Okay, so what is it? First of all, it's the Fed Open Market Committee, and just in case you are trying to be in the world of finance and yet not knowing what you're supposed to know, in case you're living under a rock, the FOMC is where Jerome Powell, the Federal Reserve Chair, will go ahead and decide, or at least tell us what they all decided, as far as what's going to happen with monetary policy. Are they going to hike interest rates, cut them, do nothing? And then they're going to talk about what they may do in the future. Well, they didn't do anything with the rate. And then there was a bunch of talk that sounded very hawkish, right? A lot of hard talk about, we need to take care of inflation, and we're not going to lower interest rates until we have this problem solved and all that. And that's all very hawkish sounding things. But what a lot of people are choosing to ignore is the fact that they got rid of the 2% inflation per target. Okay. So it used to be, and it has been for a very long time, that the Fed's dual mandate, one of the mandates was to keep inflation down. Okay. And there was a 2% target. So whether or not they're going to cut rates rested on whether or not they could show an official inflation rate of 2%. Well, that target is now gone. That means that rates can be cut more or less at discretion. Obviously, it's probably going to be something close to 2%, or they're going to have to use some justification. But when you take away the 2% target, you're taking away what is essentially a very, a solid reason, right? And I'm with you, Brian. Brian's saying everything that I'm saying, but in 6 words. So yeah, basically what's going on is that they're just saying a bunch of hawkish sounding things, but they've taken away this requirement for inflation to be at 2%, so they could cut rates whenever they want. Well, that's the reality. And for those who are, oh no, this was all hawkish and it's hawkish. Okay, fine. But the numbers don't really agree. The market doesn't really look like that, especially Bitcoin, because all it's done is go up. And that is more or less of an indication that rates are at least not subject to being hiked anytime soon, at least, and probably expectation of cuts. And I believe that, most people who are kind of deep into these matters think we're going to see 2 cuts this year, if not more. Obviously, the president is exerting a lot of pressure, asking for cuts. It might be that, Jerome Powell has to display some independence. I think there might be subterfuge or not. Long story short, though, the market's bullish afterwards. So here's what happened. If you take a look at my initial prediction prior to this DeepSeek business, I thought Bitcoin would go sideways until FOMC and then maybe go up or down, whatever. I didn't do any predictions past this dotted line, which was FOMC. And that's because the last time FOMC or CPI came out, I went ahead and predicted past that, and there was a bit of a surprise, and then things didn't go as planned. And I don't trade based on these predictions. I use them to know which way the wind is blowing and to kind of have a reference point, right? Well, in this particular case, price dipped down due to this supposed DeepSeek issue down to this low point here, and that was on Sunday when the futures opened. And then it crawled right back up to where I thought it would be. And price literally is crossing FOMC right where I thought it would cross, more or less within within a few $100. And now price is literally following the more bullish example that I put as what might happen. So here's the thing about this. The reason I can tell more or less where price might go, I'm not always correct. I'm correct more often than I'm not. And I'm able to use this data and incorporate it into my trades so that I can extract money out of the markets, right? And the reason I know how to do this is because I have built algorithms, and I've also just studied markets, and I know how this stuff works, and it's really not that complex. And when you've been doing it for a little while and you immerse yourself in a group of people who have been doing it, and that knowledge kind of percolates, like learning through osmosis and study at the same time, you too have the opportunity to have this information, to learn how to do this. And that's over at Algo Factory. We'll talk about that in a minute. Let's take a look at Solana really quick, and then we'll move on to the indices, right? Because the indices are important, right? The SP 500, the Dow, that kind of stuff matters when you're even if you're trading just crypto or you're looking at Forex, the indices tell you a lot, even if you're not trading them. So again, I did expect price to fall, but DeepSeek pushed it deeper, and I expected price to go sideways with Solana after that, and sideways it went. It just went sideways at that lower level as a result of the push down that happened on Sunday. And I do think Solana was going to head down anyway, because you had this massive move up as people bought Solana to participate in the Trump coin. Okay, so that's why you see this big move up right here. And then the market is going to cool down, right? The Trump coin cooled down. It's much lower than it was. It's, as these things go, usually you get these initial pumps, and then everybody kind of sells off and comes back to earth. And you have all the people who don't know what they're talking about, calling it a rug pull. It's not a rug pull. You don't know what you're talking about. Stop talking. So, if you want to see a rug pull, I'll show you a rug pull. There's lots of them. Go over to the meme coin market. Go to pump.fun. You see them all day long. A rug pull is very different to what we're seeing. Long story short is that in this case with Solana, price is just coming back down to reality, right? And so where is reality? I think a good place, a good spot for Solana to be is anywhere above 220. There's always that chance it could head down a little lower than I thought. I had it going down to this 220, and 220 is where it went. Okay, so if you look here, I have this Fibonacci extension, and price did eventually make its way down almost to that, which was, it made it to 220.87. I had a target of 219 or so. I didn't trade it because that was pretty wild. That was a very wild move. It was based on market shock. So I usually don't trade those kinds of things. I wait for the technical market to unfold. But long story short, Solana has stayed where it is. And I think as Bitcoin begins to show stability, Solana will come back up. And that's going to be true for a lot of cryptos. I know a lot of people have their eyes on Ethereum, and we're going to take a look at that maybe at the private live lab. I know Vita Guerilla is supposed to come on today and talk about drips too. So we're going to see about that. We'll ping him in a few minutes if we don't see him. In the meantime, as promised, we're going to take a look at the indices. And the SP 500 is, again, right back where I thought it would be. You had this big market shock. Price peeled all the way down to 59.50 or so, and then it came right back up to where it was supposed to be here in, right about that 6,050, 6,100 area where I thought price would rotate until FOMC. I didn't make any predictions past FOMC, and if I were to take a look at the algos right now, I would just guess sideways action for the moment. I think, look, high time frame, the indices are always bullish. Right now, it does look like there's a little bit of a cool off and a little bit of caution due to what happened on Sunday. So I expect price to more or less just go sideways probably until Friday. It could tomorrow's Friday. So yeah, volatility is also falling off. There is some data that just came out, and I think more coming out a little bit later today, but I really do expect price to probably develop a range and more or less just kind of be in between maybe 6,100 and 6,040, something like that for the next few days. And that's what I expect. So that said, we'll move on to take a look at the Dow. The Dow was doing great. Of course, it did take a hit when the DeepSeek thing happened, but it really recovered, and I think it made not all time. Well, yeah, it basically matched the all-time highs. It really touched the all-time high of 45,160 or so, and then it's been hanging out above that ever since. It's coming down pretty hard right now because I think some data just came out. Let's take a look at the calendar before we move on. What do we got here? Thursday. Yeah. So the European main, their version of FOMC happened at 5:15, and that's fine. It's not necessarily affecting indices. The euro seems to be less and less important. The USD, though, we just got GDP quarter over quarter, unemployment claims. And then you're going to have the ECB press conference. So I wouldn't be trading anything euro based. GDP is a little bit lower, which is going to be good for the dollar. Unemployment claims, though, are also lower. So it's mixed data. We had some strong data, some weak data. So the market may be more reacting to the unemployment claims being lower than expected. So when unemployment claims are lower than expected, then it's less reason to cut rates because the economy is quote unquote doing fine. That's just the basic metric. So what I expect here is it's obviously taken that original higher path that I drew, and I expect sideways action, probably maybe a little bit down. Let me take a look at the algo rather than the price action. Yeah, just if there's any push down, I don't think it'll go below 44,500. Yeah, I think it'll stay above this area right here. I'm gonna let me see. Let me take a yeah. I'm going to move this line, and I think it's either going to be in this range for today and tomorrow in this area, or it might head down and bounce around in this area right here. So it's either going to stay above 44.8 or go below 44.8 and probably stay above 44.3. But I don't think there's any data coming out tomorrow. No, a PCE comes out on Friday, so that might be important. That's the one thing that could throw things off is if the PCE comes out tomorrow and the data shows that inflation is still high, then we could see a little bit different of a story with these markets. We'll have to see how that goes. But if the PCE doesn't really show anything that's extraordinary, then markets will probably go sideways and stay within this range. One last look at indices here at NASDAQ, and then we'll move over to the private live lab. NASDAQ is back to more or less where I thought it would be, and it's just staying tight, staying in a tight area. Plunge protection team seems more or less on it. And again, I think the removal of this, hey, we need to see 2% before we cut rates, I think that is having a much bigger effect than people think. And I guarantee you, after this weekend and after that gapped out, especially in the NASDAQ, you got a lot of people sitting in rooms having conversations about what are we going to do. So thanks for watching, everybody. We got Brian with one more item. He has a question. Says, when did the Fed gain authority to change their mandate? Thought the government was over that. Strange. Well, the Fed is not the government. The Fed is independent. So now, of course, the Fed's charter could be revoked, but I doubt we're ever going to see that. But yeah, the Fed has control over their own way that they handle that mandate, right? So if they decide that their target is 2.5% or whatever it is, well, that's up to the Fed. I don't know that the government told the Fed it's got to be 2%. I think the Fed makes that determination. So the Fed is not the government, and I'm not, maybe it should be, but it's not. So, all right, everybody. Well, thanks for watching. We're going to hop over to the private live lab. Come to algofactory.tech. We will show you how it's done. I'll show you how I'm able to extract money out of these markets on a regular basis. It's not that hard. Actually, it takes a fair amount of work. It's more a question of work ethic than it is a question of like how smart you are or what your capabilities are or how good you are at math or anything like that. It's actually more about, are you willing to do the work? Can you sit down and study? So come on over and never, ever forget. Where's my funny thing? There it is. Don't forget.
Join us or die.